Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and any other market where there might be some or a lot of money to make on the internet. Loaded up for discussion today. We are talking BlackRock CEO Larry Fink's annual chairman letter, where he's talking about Bitcoin as a reserve asset. Might compare and contrast that with Howard Lutnick's comments recently. We've got Brian Armstrong publishing an article on why US stablecoin legislation should allow consumers to earn interest on stablecoins, which is obviously not happening at the moment. And we've got the GUNS token, inverted commas, successfully launching on Binance around $1 billion. It's dipping now, but some pretty big news coming out about the way certain investors were treated. We'll discuss all of that and more during today's show, along with a bunch of conversation around the general market rotations and where liquidity is going. I've got Legendary and Rahim with me on today's show. We are ready to get into it. But just a reminder, friends, that nothing that we say here is financial advice. This market is very, very risky, and we don't know anything for certain. So please proceed with caution and exercise your own judgment. With that out of the way, it's Tuesday. It's the 1st of April. Rahim, how are things on your side?
GM guys, so good to be here. Always good to see your faces. It's been very good, actually. I know, not to take away from like people obviously having a hard time, because obviously the markets are not doing the best. But to be honest, this is like the best life balance I've had in a very long time, and I'm like low-key enjoying it a lot more than I thought I would. I feel like I'm prepared a lot more. I'm stabled up a lot more. So it's coming from a place of like solace. And yeah, like you are here, you're posting like gym selfies. I am like balancing like social life, work, just doing personal stuff. So it's been good. A lot of like cool institutional news coming out. I think it's kind of cool to see our industry being just like legitimized. During Eid, I had a lot of conversation with like a lot of like older people in like with like a very serious overtone on crypto, which is kind of nice to see. It wasn't like a backhand comment of like, oh, so you work in like crypto and stuff. So I think that's been kind of good.
Yeah, it's a bunch of obviously we're not in the same type of market we were in January, right? So people have obviously stepped away a little, reorganizing a bunch of things to attack maybe some other things that they're prioritizing. Just checking in on the audio on Spaces. Are we all good there? Legendary, did you say
Yes.
it's all
Yes.
okay?
We seem to be all good now. Funky just confirmed that. And my nightmare came true. So what had happened is I am muted on the roadcaster. So my setup is basically I have the screens in front of me. To the right side, there's the roadcaster. And if I mute the mic there, I see a red button. And it was red all the time. So I was muted on there. But for some reason, the mute didn't work. And I was like singing and humming along parts of the intro melody, which apparently was heard in the audience. And I was like so irritated because I saw people laughing or like sending the lol emojis all the time, and I had no idea what's going on. But it also had impacted the audio in the beginning. That seems to work now, but yeah, people could hear me sing and hum along for a bit, which is not great.
I think it's pretty good.
It's
I don't know why.
it's a new sponsored segment. Now we can have new sponsored segments where Legendary sings or hums. It's like a new direction.
I mean, to be honest, we can just we own the audio, right? We bought the rights to the audio, and you're just putting your original take on top of it. We can just use that as the new audio, if anything. In fact, we could get rid of the actual underlying music, just use the humming as the.
Oh, absolutely no way. Oxy also in the YouTube comment saying we heard Legendary do a lot of things.
Oh, okay. Well, cut the audio and then let's figure out what we heard. Right, we got to get into all kinds of other stuff because we've got a lot of takes to give on what's going on in the market today. Let's get you up to speed ASAP because the market is doing okay today. A little bit of green. How about that? We've got Bitcoin up a couple of percent, starting with the majors up to 84K. We've got ETH up almost 4% to 1.8K. We've got XRP up 3% to $2.14. Solana up 3% to $127. On the meme coin side of things, again, Fartcoin absolutely ripping, up 30% to 50 cents. Pretty aggressive price action there. Moving down the board here, we've got Doge up 4%, Pepe up 7%, Trump's flat, Bonk's up 6%. SPX, Murad's coin's up 27%. WIF is flat. Pengu's actually down 6% on a day where the rest of the meme board is mostly green. I'm trying to find any other ones that might be of note. AI16Z is up 15%. Mog is up 4%. So a lot of green across the board on the meme coin side. Fartcoin leading as usual, it seems to be at the moment. Getting into the headlines themselves, we have, let me just find it here. We've got the BlackRock CEO, Larry Fink, saying in his annual chairman's letter, the US doesn't get its debt under control. If deficits keep ballooning, America risks losing that position to digital assets like Bitcoin. We'll be diving into a bit more of the depths of that letter a little bit later. Had some interesting points to note. We had Brian Armstrong publishing an article on why US stablecoin legislation should allow consumers to earn interest on stablecoins. Rahim's going to be sharing his thoughts there. And then finally, the GUNS token successfully launched on Binance around $1 billion, but did so by changing investor terms at the last moment. They did not get the unlock they were expecting. And so we'll be discussing both the token launch and some of those investor deals going on at the moment at the same time. Some notable price action. We've got the GUNS token coming out at $1 billion, but it's dropped, I think, 30% now to around 700 mil. The recent TGE on SUI, the data storage protocol Walrus, is up 22% to 2.6 bill. That's come out really, really strongly. And then, as I said, Fartcoin is leading the meme coin side of things, up almost 20% in the last 24 hours. Legendary, anything going on the NFT side that we need to know?
Yeah, we did see a bit of recovery on the NFT side. Pudgy Penguins are up a couple percent above 10 ETH again, 10.14 ETH floor for them. However, the big winner, once again, Bored Apes, they are moving up and up and up. Now they're up 12% over the last 7 days, up another 6% yesterday, and sitting at a 15 ETH floor now. And the rest of the market, including Doodles, has had a nice move up again, but clearly the apes are the leading collection here.
Yeah. The apes is doing unbelievably. Like, Ryan, you've been speaking about how it's like performing much more in line with traditional collectibles, right? They seem to have moved past the cycles of speculation. Any thoughts on the Bored Ape? Well, as a collectible in the community in general at the moment?
I think at this point, like their floor, I would say, is like pretty organic. Like anyone who's buying it, they're not buying it for like a short-term investment. There's no speculative news of like a token or like a launch. And I believe that long-term, a lot of assets that actually have some credible backstory to it will fall in the same category. So yeah, they're definitely doing super well, have been super stable for the last 4 months, actually.
Like it. I think that's pretty fair. I would agree with you completely. Getting into the rest of the roundup, see with everything else happening, we had the US Treasury announce. It's pretty interesting. They'll be disclosing their Bitcoin holdings on April the 5th after an audit. Remember, we spoke about how basically the government doesn't know how much Bitcoin it has, and they've said that they're doing the audit, and so in a few days' time, towards the end of this week, they'll be announcing how much Bitcoin they actually hold. That would be pretty interesting to see. Eric Trump and Don Jr. involved in an investment into American Bitcoin mining company. The Trump family conglomerate continues to invest in crypto and position itself very, very well to take advantage of the positive regulations for the industry. Circle, the issuer of USDC, reportedly preparing public filing for its IPO in April. That will be very, very interesting to watch. We always talk about how to get exposure to stablecoins, the best business in the world. That will be a potential way to get exposure. See how that goes. Kaito announced partnership with Noise to facilitate mindshare trading. This is an app on Mega ETH, which is still in testnet, but they're allowing people to trade mindshare, which will be might be an interesting alternative to meme coin trading, given that so much of that is just trading attention too. That'll be interesting to see. Strategy acquired another 22,000 Bitcoin for 1.92 billion at 86K. That sounds high, but I copied and pasted that from the official announcement. So that is how much they bought recently. Ambient raised $7.2 million from A16Z, Delphi Digital, and Amber Group to create a replacement for Bitcoin. That was kind of an interesting piece of news, backed by some big names. The memes by 6529 on the NFT side kick off season 11 today with Arsenic. That's like a very popular NFT collection that's been running multiple seasons now, always minting at around 0.06529 ETH. Got like some very big super fans in that community. Got a cat pre-sale. Remember, people may not even know this if they weren't around in 2021. OG NFT collection was once very popular. Now, not so much. It appears the pre-sale, which aimed to raise $1 million, raised just 3.66 ETH. That was not very successful, but also in the pre-sale side of things, Doodle's co-founders shared a new pre-sale for Project 02. Appears to be a utility token for a game. This is not by Burnt Toast, who is the current CEO of Doodles, who is one of the co-founders. It's by the other two co-founders who I don't know if they're still deeply involved with Doodles, but in their bios on Twitter, it still says they're co-founders in the present. So interesting that they're launching that as Dude is meant to be coming out at some point soon as well, right? So that's interesting to see there. That's the Web3 Roundup to get you up to speed with everything else in the space. What is catching your attention before we get into the main stuff there? Legendary first, maybe.
Yes, sir. Definitely the Circle news, as we have a bit more info on that, and I want to kind of dig a bit deeper into that. So Circle has reportedly, and this is coming from a CoinDesk article, hired JP Morgan and Citi to lead that IPO, to be the underwriters of that. They do plan to be ready to file the prospectus late April, which would mean that the IPO could be at some point before the end of June. Very interesting to see the valuation, because I feel like this is a good reality check to see a company like Circle is quote unquote only targeting a valuation between 4 and 5 bill, which when I first read that article seemed shockingly low. But that reminded me very much how inflated our views on valuations have been in crypto. And I was like, oh, yeah, are they missing a zero? I double checked with another article and was like, no, this is actually the valuation. It does make sense, and it seems weird in a world where we have so many tokens coming out of the bill plus that clearly shouldn't have that valuation.
Yeah, it's like if the GUN token comes out at 1 bill, you'd think that Circle should be more than 4 times the valuation of a shooting game on Avalanche, right? That's what your instinct would be, perhaps.
That is correct, yeah.
Okay, yeah. So yeah, I mean that's very interesting to see where that comes out. Just curious, like, is that something, we talk about stablecoins all the time, Legendary? Is that something you'd want to get exposure to, given that, or is there too much uncertainty in the stablecoin business now? Like, I know that Tether obviously is the big player by a huge amount, right? I think the market cap for Tether is at least it's like 10x what Circle has. I'm pretty sure. I can't remember the numbers on DeFi Llama. Maybe you can see now, but pretty sure it's at least 10x what Circle has. And I guess you've got this uncertainty as to whether all of these banks are going to come in with stablecoins. It's going to feed into Rahim's headline a little bit later. Would you be interested in a bit of Circle stock, Legendary?
Yeah. So first of all, Tether market cap is at 58 bill. Circle is at 9.5 bill according to CoinMarketCap.
Okay.
Still a big discrepancy. I do agree with that. But if you look at it from that perspective, that you have this basically market cap reported, and then the companies quote unquote like half the valuation of that, it makes sense. And if you look at private secondary markets, this is where Circle has been trading it. So people have on private markets been buying exposure to the company for a valuation or at a valuation of $5 billion. So from that perspective, I would be pretty intrigued to do that. And then again, if you extrapolate and look at the numbers on DeFi Llama, where in DeFi Llama you obviously have all of the networks, not only mainnet, you can still see that Tether has a market cap of 144 billion and USDC has a market cap of 60 billion. So it's basically a 2.5x or a 2.3x between the two of them. So I'd definitely be interested to get a piece of the action depending on how high it opens.
Interesting. I think I'd want to see I think you're probably right. I kind of want to see. Well, I want to see what Rahim says about this stablecoin stuff that Armstrong's been talking about a little bit later. We'll be doing that second half of the show, and I also want to see where this stablecoin regulation comes out, because if like this, okay, I'll hold it back. Because I've got some commentary on what Rahim's going to say a bit later. Rahim, before we get into that main stuff, which I was just about to do, anything else catching your attention in the roundup?
Yeah, because we have like a lot of institutional conversation later, I'll probably like touch on the Doodle news. I just think it's like so fascinating in our space that we kind of just like stick the previous project or launch to the founder. And even if they launch something, like we always call them, oh, the co-founder of Doodles. Like Poopy, at least like publicly to my like to public like knowledge, he's kind of like like he's not involved like operationally in the business, things like that. And this isn't like his first venture either. Like he was part of like Dapper Labs that did Crypto Kitties. And like if you ever have a chance that like to speak to him, he was one of the people who ended up putting Crypto Kitties in like galleries in like 2018. Like I'm talking about like galleries and stuff. He mentioned a particular gallery, I believe, in Germany somewhere. So I just think like, it's just fascinating that in the regular fintech world or like the tech world, it'll be like Elon Musk starts SpaceX, or Elon Musk starts Neuralink or whatever. But in our space, it's like ex Doodle founder, and it's almost like it's just like so funny to see that that badge kind of like sticks with you. Like no matter what happens, it'll be like, oh, the modern market people are like launching stable coins or XYZ. So I just find that fascinating how that works in our space.
It's like your community cannot let you do anything else. It's like once you're the co-founder of an NFT community, it's like, what do you mean that you're going to be focusing your attention in any way on anywhere else apart from the floor price for anything more than 5 minutes? You must remain focused on this very, very specific NFT collection forever now. I take your point. What about the idea though, Rahim, that, you know, who knows, we have none of the details here. It's obviously a pre-sale. I'm not sure how much it's raised at the moment, but what about the idea that, the dude token is coming out pretty soon? Like, I think doing one raise whilst there's another raise, as you say, maybe they're not super involved with one, and so in their minds it's like, well, okay, these two things are two separate things. Should we I still think there's a bit of a fractionalizing liquidity a little bit there, right? Potentially.
Yeah, for sure. I definitely think the timing of it is not the best, but it's also, I feel like markets will decide. Like, we all can have like whatever opinion and stuff. A couple of months later, a couple of weeks later, we just get like a better optics of it, like how the market reacted. And I think that no matter what my belief is or your belief is, objectively, I guess we'll find out if it was bullish or bearish.
Yeah, fair enough. Okay. Well, the thing that I wanted to just touch on briefly as well was just the price action of some of these big gainers and losers. So, what do we think of, like, is Fartcoin always a leading indicator of stuff to come? Why is Fartcoin so volatile all of the time? Rahim, you used to, well, I don't know if you still are, but you were definitely a meme coin, culture coin trader, or collector, or however you want to phrase it. What's your thoughts on Fartcoin and its exceptional volatility? On days when we're up, it's most, and then yes, there are days when it's very far down too. But to be honest, maybe not as much as anything else either. What are your thoughts on this coin?
Yeah, I think it's fascinating because it's the one of the only coins that I've been like trading in size in and out. And this is based on like even like on my timeline, I see like some of the people like EB7 and a couple of people trade Fartcoin in like size. So like it's kind of hard to gauge on like a granular level that why is it that you have such volatility, but it also ends up like performing like what, like 32%. Absolutely nuts. I just think it has like a lot of whale activity. I feel like for the longest time, Bonk was like the main character for like Solana, and then it was Whiff, and then like kind of like all that like meme coin optics went south a bit. The Animo meme coin, the Ansem optics kind of like changed for Whiff and stuff. So I feel like Fartcoin's become like the coin, like the beta play for like Solana. And I remember this was exactly what Pepe was like last February. there was a point where like Pepe was like outperforming ETH by ridiculous. And on my portfolio app, I actually track everything in ETH. So I was actually happy that ETH was down and Pepe was going up because I was stacking ETH. And suddenly when ETH started going up, my ETH amount went down in like Pepe. And I was like, I actually don't want this. So yeah, I feel like it's a massive beta play at the moment.
I don't know what to make of it, because I feel like the timing of this, I'm just not sure about the timing of it. Like, in what circumstances would this be the thing to move aggressively back up when it's already been up and come back down? Because I think one of the things I'm kind of standing on is the idea that the things that have moved really hard and fast before will almost certainly not come back. Like, I don't think a lot of that stuff is coming back. You had your time with some of the meme coins, you had your time with some of the AI stuff. Maybe there's some actual quality stuff that was built, maybe more on the infra side or the apps, and maybe those can. But in terms of the actual meme stuff, personally, I think there's way too many, and I don't think they're going to come back. But Fartcoin just keeps. I'm wondering if it's like technically this was only in. Just looking at the max chart here, this came out in November, so I would have thought it's like had its time, but it won't die. I mean, I know none of them have technically died completely, but it just keeps being stronger than everything else. Do you have a view there, Ryan?
Yeah, I think I mean, like you're spot on. I've been like thinking about this as well. I've been like entering and exiting. It's hard to gauge all of this. It's one of those things like, all of a sudden one NFT project does better like long term, one DeFi product does well long term, one meme coin does. So at some point, like, like you can't like really create like a massive thesis on memes and stuff. So I don't really have one.
Not thinking, it's not that deep. Not thinking too deeply on it then.
Just respect the charge, respect the pump, sir. Respect the pump.
Respecting. Okay, fine. We'll respect it. We'll get into maybe some more respectable news now as well, away from Fartcoin. That's how we do it on the show. We go from Fartcoin to BlackRock CEO Larry Fink, annual chairman letter. Perfect adjacent pieces of news. So let's get into this one. This is the news that yesterday Larry Fink, CEO of BlackRock, dropped his annual letter to investors with some big thoughts on Bitcoin as a reserve asset and tokenization. The first thing he said was that he warned that if the US doesn't control its debt, the dollar could lose its reserve currency status to assets like Bitcoin. BlackRock's Bitcoin ETF, IBIT, launched in 2024. It's already been a monster hit, over $50 billion in assets under management in less than a year, making it the biggest ETF launch ever. He went on to say, and I thought this was interesting, to be clear, I'm obviously not anti-digital assets, but two things can be true at the same time. Decentralized finance is an extraordinary innovation. It makes markets faster, cheaper, and more transparent. Yet that same innovation could undermine America's economic advantage if investors begin seeing Bitcoin as a safer bet than the dollar. The reason why I thought that comment was interesting was because I've watched various interviews with Howard Lutnick, the Secretary for Commerce, and when he speaks about Bitcoin, he talks very specifically saying, don't compare it with the dollar. Too many invested interests in the dollar. Bitcoin is a commodity. Talk about it as a commodity. A commodity is not threatening to the dollar. You want people to not be threatened as you're trying to push this new asset on them. Whereas it sounds like Larry Fink is kind of like, no matter how you slice it, no matter how you frame it, no matter how you define it, Bitcoin will inevitably become a competitor to the dollar if the US can't get their house in order in certain ways. So that's what I'm thinking of from that perspective. And then the other main thing that he speaks a lot about in the letter was on tokenization. He said he sees blockchain revolutionizing finance. Every stock, bond, and fund could become a digital token. It means faster trades, lower costs, and fractional ownership, opening doors for more people to invest. He calls it a shift from postal service to email for markets. And BlackRock's already expanding. They've got the Biddle fund on ETH. They've got it on Solana too now. This interesting phrase in the letter, which is kind of, I guess, the vision for BlackRock, by which they live, is when people can invest better, they can live better. And he gave all kinds of interesting statistics on how the number of investors in the States has been rising over time. And they obviously want that to continue. That's good for business. But I guess that's obviously, he did note that part of that success story in the recent, the last couple of decades have been with historically low interest rates, which have obviously been quite helpful to the markets and been beneficial for people who wanted to be investors. So those are the maybe two key takeaways and maybe the general vibe of this letter. Coming to you guys to get some thoughts here. Legendary, what are your thoughts on this? Maybe any general thoughts, anything specifically on Bitcoin versus the dollar? What are you thinking here?
Yeah, what a great letter. Like, really can only recommend to read the whole thing. It has so many interesting data points in it. And I'm gonna get to your question in a second, but two things that really stood out for me were that Larry Fink is talking about the $68 trillion investment boom and asking the question, who will own that, with 25 trillion in roads, 21 trillion in energy, all leading up to 2040. And also speaks about the fact from the history of when the first stock exchange was launched and was catered more towards wealthy people, and that the world is not really set up for giving, or the financial markets giving, like access in a like 50, 30, 20% tier model that he describes to like individual investors and like privatize everything. And this is kind of where Bitcoin comes in. This is kind of where tokenizing everything comes in and allows other people to get access to investments. And for all of those reasons, and for the fact that towards the end of the article, he mentions three basically pieces of data that I found very interesting. I'm going to bring them up on screen. 33% of Americans have no retirement savings. 51%, this is shocking, are more worried about outliving their savings than of death itself. And a third would also have a hard time to pay an unexpected $500 bill. And if you take like all of those data points, if you take this journey into like privatizing markets more, into tokenizing markets more, and making them more accessible to like typical retail investors, and the role that Bitcoin could play with that, definitely agree with that view. And I think it gets really interesting if you add or layer that perspective on top of it, which is what Larry Fink did in this letter, and basically painting a picture of how a world could look like where Bitcoin wins versus dollar and what would need to happen there. But much appreciated deep dive. And again, there's like so much to process in this. I feel like we could talk about this entire letter for the rest of the show, but I'm gonna pause here.
Yeah, do you know what? That's a great point. It's actually just an interesting read. Like sometimes you think of, I don't know, these annual letters as, I don't know, like a quick shareholder update style thing. But it's like, no, this is going into history. This is going to, there's like, it's a really genuinely interesting read. Just to your point about like this broader perception of people and like where people are, where people are perceiving their own wealth at the moment. He asked this interesting question of, once people start investing for retirement, the goal is to make their money grow as much as possible. And they conducted a survey in January asking Americans how much money they'd need to retire comfortably. And they took the average of those responses. And the answer, you know how it's funny in crypto Twitter, there's people always joking around like, this amount of money is not enough. 1 million is not enough. 10 million is not enough. Like, what are you meant to do with $20 million? So the average American says it was just over $2 million. The average was $2 million, 89,000 to be exact, more than they were expecting. But so that was how much they think that they need. And the reality is almost no one is close. So even Gen Xers, the oldest of whom will start retiring in 5 years, are falling short. In fact, 62% have saved less than 150,000. So I don't know what's going on here from the perspective of, are people's perceptions being warped maybe to some degree as well, or is the standard of living really in order to keep up with a decent standard of living or a perceived good standard of living, has that really got that much more expensive? Is it a little bit of both? But point is, the reality, the delta between the reality for the average American, it sounds like, and where they would like to be, or with how much money they would like to have, I think that gap is, well, it's huge. It's $2 million basically, because they haven't found a way to bridge that gap at the moment for whatever reason. So I thought that was interesting too, and it's got all kinds of further interesting statistics on that. Rahim, what were your thoughts hearing this commentary? Did you have any takes on the difference between Lutnick's perspective on Bitcoin, which was treat it as a commodity, don't try and antagonize anyone by saying it's going to come for the dollar, versus this take, which is, guys, if you don't get your house in order, like, it's going to happen regardless. So what's your thought there?
Yeah, I definitely love those takes. There was a friend of mine once, he said on a podcast we were recording, and that statement kind of stuck with me, is the more subjective truths you have, the closer you get to the objective truth. And I really like that idea. Like, the more perspective that you hear, like different polarizing one, I think it helps you kind of gauge what you want to like really believe. Yeah, I haven't had the chance to read the whole paper stuff. I skimmed through it. From the way that you guys are talking about it, I definitely want to deep dive into it. I like, on one side we are talking up comparing Bitcoin to gold. At one point we are just like talking about straight up like investing. There's some of it that'll bleed into the stablecoin segment that I'm talking about when it comes to investing. But yeah, I definitely like, this was even just by skimming through it, it was like a nice thought leader kind of a perspective I got from that paper. So I definitely think was nice. And to your point, talking about the delta between people's perceived wealth that they need to what they actually need, I think this kind of changed with like globalization and digitization of just like content and media and our exposure to things and stuff. It's like, before you didn't know what you didn't know. And I think that has kind of changed a lot. So I still think if you go in like small pockets of society in different countries and rural areas and this and that, I still think you will find like a lot of people that their perception of like a great life, a happy life, is actually not as crazy as for people like who live in like big cities and stuff, like such as like myself living in Dubai. So I definitely think it's like a product of media and just digitization of everyday things, you know?
Yeah, I think that's probably fair. Got some interesting points going through the comments. Tom just mentioned that if you layer in the fact here that the working population is starting to shrink, a lot of money is invested via pension funds, right? And I think already, you might remember in the UK not so long ago, there was like a pension crisis at one point in time when that interim government were taking some strange decisions. But the working age keeps getting pushed further and further. The birth rate is just like not keeping up in order to support the number of older people. People are living longer. So like all of these things factoring in with each other, I think is strengthening someone like BlackRock's argument, which is like, guys, you got to invest properly here, because you just got to figure this stuff out, because it's not going to be obvious. I'm someone that's actually personally quite skeptical on pensions. I don't know if they're going to be there sufficiently in the way that maybe the previous generation were able to rely on them, because based on all of these trajectories, the working population, the birth rate, the increasing age of life expectancy. I think it's all like a confluence of factors which is making it difficult to be able to rely on those in the way that previous generations did. So a complicated set of factors, maybe bringing it back, depending, Legendary, if you want to continue in that direction or you want to kind of circle back to the core crypto parts. Spoke a little bit about the difference between Bitcoin as a competitor to the dollar versus not. What about this emphasis on tokenization? I think that part is nothing new. He's absolutely obsessed with tokenization now. I think it's fair to say in a lot of the interviews. Any further takes there?
Yeah, quickly sharing this chart that shows the EU top 10 economies and the working age population and how that is projected to significantly decrease leading into the 22nd century. Also adding to that, I think on tokenizing everything, as you said, yes, per se, it's nothing new. It is also making the point that things in Europe, in the US, take so much time to build. talking about infrastructure, talking about energy. He mentions that a power line, both in the US and in the EU, to build that takes like a high voltage power line that takes 13 years. China can do it in a quarter of that time. And he also says you can't democratize access to investments if stuff like that takes so much time. And one final comment, maybe because it's relevant to me, and we do have quite a few listeners from the European Union or from Europe as well. He is surprisingly bullish on Europe. He's making the point that he talks to a lot of policymakers, and he sees, or those policymakers are seeing that regulatory roadblocks aren't going to remove themselves, and mentions a very interesting stat with that as well, saying that reducing intra-EU trade barriers to the level between the US states, that alone could boost productivity by nearly 7%. That's $1.3 trillion to the economy. That's the equivalent of creating another Ireland and Sweden. So he says basically policymakers are realizing that there is issues in the EU, waking up to that, and there's like massive potential to unlock there, which is quite nice to read because I'm typically always pretty bearish on the EU. So it's good to get a bit more of a positive take on that.
And I think maybe one of the reasons he's speaking about that, historic strong alliance between the EU and the States is because there's a palpable, and notice this in a bunch of other commentary, but there's palpable fear around China, I think, in this letter. Said China is not waiting on a couple of fronts. They're building 100 gigawatts of nuclear, which when completed will mean they supply half the planet's nuclear power. And then on the production front, they've got automakers like BYD. They sell more electric vehicles than any other company in the world. Next year, they plan to add full autonomous capabilities to their cars at the same price as last year's models. And they already sell EVs for just $10,000. I didn't know that. Which is a price that no US or European automaker can match. So I think there's like palpable China fear in here as well, and a real feeling that like, look, we kind of need to get our act together if this stuff's like slipping away when it comes to energy and production. And so yeah, that's that on the kind of some of the bigger topics outside of crypto. As we said, very interesting read. More generally, would highly recommend having a read through to get a snapshot of how they're kind of seeing things. Let's probably keep it moving though. We've got a couple of other interesting bits of news from some other prominent leaders. Rahim, you're going to talk to us a little bit about Brian Armstrong, CEO of Coinbase, what he's up to, and suggesting about stablecoins, the best business in the world. What's going on here?
So Brian Armstrong put out like a fantastic article on on-chain stablecoin interest, and I thought it was very well written. So he's basically talking about like the U.S. legislation allowing consumers to earn interest on stablecoins, and he makes like a couple of fantastic arguments. So obviously, like where stablecoins like USDC, they are 1:1 pegged to the dollar, so they buy US treasuries, they are invested in US treasuries, and whatever interest they earn, they keep it to themselves. You guys have talked about on the show multiple times how it's been one of the most profitable business. Now they're going public with their companies. Now, what he's talking about on like a couple of fronts. So he's saying that if a regular US citizen is leaving money in their savings account, they are earning interest as low as like 0.4%. And you have like inflation, like last year, the data that he puts is about like 3%. So he's like, you straight up on like losing money by leaving money in your bank account. So that one argument he makes. The second one he talks about is people like who are like debanked. So he's talking about like a whole stack of people who are debanked. So not only do they not have access to like a financial system, but like this way that they can actually like grow out their wealth, have like a way more like stable lifestyle, and kind of like be able to integrate them in society. I think that was a great point. The third point he makes is that if you look at it from like a zoomed out perspective, that if stablecoin issuers are investing in US treasuries, that kind of like creates like this flywheel for the US economy to grow, you have consumers who are basically getting interest on the stable coins. So now they have way more spending power to actually consume products every day from like, like lifestyle ecosystems. So I think he makes like some fantastic great points how this is like a win-win situation for the entire economy. Just like speaking from personal experience, one of my most interesting conversations I had in the last year, I came across a stack of people in Dubai, especially from Lebanon and Turkey, who are holding stable coins as a form of currency, never been in Bitcoin, never been in ETH or anything. But their whole idea is that A, we want to hold a currency that's like kind of like their regulatory ecosystem. Secondly, they just want something that's just not going to go low in value. Lebanon has lost its currency value a lot. Egypt has done the same. Turkey has done the same. So there are like a whole group of people out there who like to live on like stable coins. So this is like a great value proposition to them. And I thought like the article is very fantastically written, and it makes it sound like, yeah, like it seems like the government would win, the consumers would win, the economy would run great. Like, why wouldn't we do that?
Excellent summary of the information. Just clicking over and over again to try and get off mute. The I guess the counter to that, it's not really a counter, because I think, look, the only reason these companies like Tether and Circle have been able to make so much money is because at every other point in history, it is not possible for you to take custody of someone's money and not give them anything for it. Like, it's ridiculous. It's a ridiculous like cheat code that's just happened in this particular point in time, because people are so desperate to get on chain, and they're happy to forego all interest, and just because they really want to get on chain, when ordinarily, obviously, with a bank, they have to give you some interest, right? But the point now is, if you can allow people to get access to that treasury yield of 4% or whatever, that is very, very meaningful amount of interest that can go direct to consumers. However, it does cut out the banks. And so I think although this is like a beautiful vision, my one question is that I tweeted this earlier today. It all sounds good until you realize this would kill banks. Why would you necessarily hold your money in a bank if you could hold these stable coins and just get automatic yield all the time? I do think, I mean, maybe even the counter to that is, for whatever reason, there's like so much inertia in general with the population. I think I was speaking with Oxy beforehand, and apparently Apple already have like a relatively high interest savings account. Maybe it's like 3.7% or something like that. And the question would be, well, why didn't everyone move over? Like, if your bank is giving you 0.4%, which I think is the number that Brian Armstrong quoted in his article, which is unbelievably low. Like, banks really pass on almost nothing at the moment, unless you choose, like, you have to like take your money out of your normal account and then put it into like a high interest savings account. Like, they do routinely offer those products. But if you're just in your normal account, the number is super, super low. And so I'm not sure why. Well, I think there's always a bit of inertia, and people are just busy doing other stuff, and they can't necessarily be bothered to chase the top yield all the time. But any reflections there, Rahim, on like people's ability and desire to actually switch over? Is this as disruptive as we think it could be? Would people actually be bothered? Like, I think it's awesome, but are people ready for that?
I think it's like an education thing, right? I think for the longest time, like I think about myself, like growing up, you're just like not very aware of what the right investment thesis is, even from a very conservative point when you were younger. I don't know how the education system is now, but considering like, with the rise of AI, and like I feel like getting a job or just like integrating into like a career is a lot harder. I just think like the idea of having like certain people, I mean, like to Larry Fink's point, that's like the direction he's also taking, right? Like in a very different way, what he's talking about, that okay, looking at like a different investment thesis and stuff. So I just feel like I think this is like a very philosophical question, because it's almost like a transition of how we do things to how we want to do things. And you obviously have a different society that kind of takes time to kind of get there. It's a progression, it's a transition, and that always takes times. But like I think like these conversations are important to have for us to get closer to the objective truth.
Sounds good. I think that's fair. Led, you want to take the other side here?
Yeah, I don't think this is killing banks, because the big thing here is the consumer debt. Consumer debt in the States is 18 trillion. That's 12.6 trillion in mortgage, 1.6 trillion in auto debt, 1.2 trillion in credit card debt, 1.6 trillion in student debt. 11% on average of an American's monthly income is spent on debt payments. That is a pretty serious number. A lot of, obviously, the consumer debt is rising. It's up another 13% from 2020. And this is where banks really do make money. And if for some reason there becomes this big trend of chasing yield on your cash holdings that you have, nothing is stopping banks from basically defaulting you into that like high savings rate account or having a stablecoin system in the background. Because what DeFi or what Aave can't offer you is to say, oh, I have 50K and I want to buy a 500K real estate. You will see that borrowing and lending is the complete opposite. We're actually having pretty conservative LTVs with all that kind of stuff. And you want to have a credit card company approach you and ask you, hey, do you want to have another credit card? We pre-approved you for 6K a month. That's not going to happen in DeFi. And I feel like this is a massive thing, the consumer spending and the debt related to that, that is very much keeping banks alive and healthy.
Okay. Interesting. You mentioned the house stuff. I'm pretty sure I read that Robinhood wants to take their financial app in that direction. Like, I don't know if you saw, well, we spoke about it, I think, on the show. They said they're going to be starting to do cash delivery to people. If you need cash, you can just use their app and get a driver and they will come over and bring you cash. But I think they're moving towards like an all financial services product, which should ideally incorporate the biggest financial purchase that you'll ever make in your life, which is the home, right? So I think it's an important point you make, Legendary, because in the end, that home is so important to so many people. And if DeFi can't fix for that, if it can't figure out a way for you to get some maybe extra stuff to deal with maybe one of the core, whether it's a problem or whether it's just core desires for people, I take your point. That's like a really big thing for people. So, maybe it's like fun and games in DeFi with whatever, but like when it comes to your home, you're going to need some more, right?
And it will
I think
take
especially when go ahead, Ledge.
No, you go. I go after you.
Yeah, I think especially when you just think about like in the traditional system, like the moment you add KYC to something, I think it changes people's risk abilities to be like, okay, we're fine with giving an X person like a higher like loan or like an X interest rate. And I think in crypto, like there is so much of like non KYC issuance of like not knowing. I think that fundamentally is like, I think to Legendary's point, that changes institutional risk from their point of view a lot with KYC and just knowing your stance and knowing your spending and XYZ on paper.
Okay. Very interesting stuff. Maybe the final point before I pass over to Ledge to get into the final headline. It's just a regulatory capture question. Obviously, Circle, Coinbase have a very close relationship with Circle. That seems to be like perceived as the American stablecoin. You've got Tether that's very global, maybe more popular in other places, although they've obviously been invited recently to the White House and they're kind of very involved in those conversations. The perspective would be that there's going to be a lot more competition coming into the stablecoin market moving forward. And so we'll see how that goes and whether they'll be able to unlock this earning of interest on stablecoins. I think that would be a huge unlock. Let's see how that goes. Let's get into the final headline for the day. We've only got 4 minutes left. This GUNs token, we spoke about it yesterday. Big game on Avalanche. Just what do we need to know? Seemed like it was going to go well, and then something came in and some bad information. What do we need to know here?
Absolutely. The GUNs token launched successfully at $1 billion on Binance, but there was some very bad news for investors. According to a post, which I'm sharing on screen by the prominent investor Grail, it was supposed to be a 5% unlock for the $40 million seed round and a 2% unlock for the $60 million strategic round. However, those terms were changed a couple of weeks ago, and zero tokens unlocked for those investors at TGE. Instead, they were presented with a 12-month cliff or the option to receive a refund. And these investors have been waiting for 3 years to launch that token. Grail initially has shared some more information on that this happened last minute, which then in a later post he corrected that was not the case. It was announced a couple of weeks previously to that. So this is why it did present the updated figures from the get-go. And what he also had mentioned is that this is not unusual. It has happened to me as well. I think it has happened to all of us hosting the show as well, that we invested and terms were changed pre-TGE, terms were sometimes even changed post-TGE. And Grail did go on to explain some of the details that, as I said, vesting and tokenomics exchange are not that unusual, especially if top-tier exchanges are involved. They can apply quite some significant pressure on the teams and basically tell them, look, if you want to have the listing on this and that exchange, this is what needs to change because we need to have a significant share to offer that to our liquidity miners, to have to ourselves. And you either take that deal because you think that having this top-tier exchange is helping your token, or you just walk away. Grail also mentioned that it has happened to him in several other investments. And if you take a look at the SAFT contracts, the safe agreements for future tokens, you will often see that there is a clause in there that says the teams can actually do that. But he also makes the point that it is possible that investors can fight back with that with a lawsuit if things actually go badly for a project. And we do not, to this point, have some sort of legal precedents or cases for that have been fought out. But the key takeaway is that those teams indeed can change the terms. You have, as the investor, signed a document that says that they can do that. And if it happens, very often it won't be in your favor.
Interesting stuff. Ryan, what are your thoughts here? You've invested in a bunch of things. Where do you stand on this? It's funny. I guess we have this conversation more when the market is down and when things are not working well. Is this just something to be expected when you take on the risk of angel rounds? Like, look, 9 out of 10 of these are not supposed to necessarily be successful, right? So therefore, is it okay for people to do these last minute changes to kind of change some very important information very, very late? Or should this just be kind of agreed beforehand and all sorted? What do you think?
Yeah, I've been thinking about this like a lot since yesterday this whole thing came out. I just feel like there's so much nuance. As I do more and more investing, I've become more accepting to the idea of like stuff like just this happens. Like I know sitting on the back end, a lot of people aren't able to differentiate between malicious teams and teams that are actually just like trying to push, but sometimes pushing makes calls pivoting and understanding, okay, like, if you want your token being listed on Binance, they have these rules. What do you go about it? Because that's what like investors expect as well. So I just feel like there is so much nuance to all of this that I've started building. Like, although I must say, I feel like I'm way more exposed to angel investing after experiencing for it for 1.5 years than I would have liked. But I think like there's no one more to blame than myself. And I just think like building like a lot of stuff in the background, I've just like realized markets change a lot faster than people make it seem. I get it, it's your money, you're like losing it, or like you're seeing these terms change, it doesn't feel right. But like a lot of times you have like actual teams just like trying to survive and pivot and work out model. It's not like always malicious, so it's tricky.
Yeah, in this specific question, it's like, would you rather they don't? Because I guess the point here is sometimes the exchanges are pushing these changes. Like, look, if you want to be listed on Binance, you need to make this change because we do not approve of these tokenomics. And so the question becomes, from a team's perspective, is it better for us to be on Binance and all of the benefits that come with that? And change the terms, or should we stick to the terms and just try and do the launch somewhere else? And I guess there's no 100% correct answer for that. Like, you have the scope as the team to make that decision. You have the contractual ability to make that decision. I guess in 12 months' time, when the cliff unlocks, you'll know how that has played out for your investors much better than you do now. But would they be happy with the 3 to 4x in a year's time instead of maybe a 3 to 4x now, but then a faster declining price? Where does it hold up better on Binance? Like, I think there's a lot of factors at play here, and it's definitely not a science which you can conclude very, very easily.
I actually think you can. Like we even had the chart on the show where we looked at the launch pool token performance, and we've seen that basically most of the launch pool tokens are down tremendously after a long enough time. And then you just need to look, what is the time period? Is it a year? And then if your cliff is a year, then the likelihood that your investment won't be worth a lot in a year from now. And by that point, you have basically locked up your capital for a total of 4.5 years. And then you can look at the opportunity cost that you missed out on by doing anything else with it out of 4.5 years, like perfectly connects to the news that we just had with the dollar balance is doing nothing on your bank account versus the average performance of a launch pool token. And if you look at that, it's not a good look to optimize for that. If it's a shorter cliff where you have a smaller unlock, sure, it can work out very well in your favor. But if you suddenly have 0 unlocks in a 12-month cliff, likelihood is not the highest that this is good for you, especially as the early unlocks go to BNB launch pool participants. And who's the marginal buyer of your low flow token then? Like, who is the buyer who comes in and says, oh yeah, there's like 7% of this circulating, it trades at 1 bill. Sounds reasonable to buy that here. And then you also know that what these investors who waited for 3 years, once they have the unlocks, will obviously want to realize some of the profit that is left. So I think that if you have the concrete terms and you see, and I wasn't able to find that chart in the last 1-2 minutes of the like historic launch pool performance, I think you can figure it out for yourself that depending on the exact terms of the exact project, if it's a good deal to stay in or if you want to get refunded and if you got shafted by the changes or not.
Yeah, I think that's a fair point. I'd like to see the Binance launch charts to see if it's any better ultimately over a year-long period. But one thing that you can say immediately in the last 24 hours, although who knows when a market maker is going to kick in here, GUNs is now down 33% from the $1 billion launch price to 660 mil. So it probably doesn't look good, or doesn't feel good, at least, seeing that as an initial investor, knowing that you're now locked up for another year after you first invested 4 years ago. Okay, that's that. Interesting conversation. Hope that was interesting to you guys. Interesting corporate stuff, interesting token stuff. As usual, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour. We're live on X video, YouTube, Apple, and Spotify podcasts. Thanks to my co-hosts, Legendary and Rahim. As always, we hope you have a wonderful day. Take care, and we will see you tomorrow. Bye-bye.